Welcome back, everybody. It's the Y Trader. That's right, Rothman here. And it's time for the picks. That's right, the picks that make you money. We buy and we sell stocks. That's what we do. What do we got for you today? Transocean. Ticker symbol RIG. That's right, rig. Offshore oil is gushing again. After going through more than a decade plus of contraction, oil is back on the rise. Energy has been a hot topic for the last 12 months, and it should be, because we live in a very unstable world right now. We've got supply shocks everywhere, and oil is a big factor in the supply shock story. Because of the war in Ukraine, because of the China shutdowns, because of the lack of infrastructure and investment over the last decade plus, we are in an environment where demand is still high for oil and the supply is not enough. So where do we get excess capacity? Where do we bring oil online again? Deep sea drilling. Deep sea drilling is expensive. It has always been expensive, but with the price of oil depressed, it doesn't make sense. But you know what? It makes sense again because the price of oil has been trading $80 and plus. It's been trading as high as $120, but anywhere between $120 and $80, it makes sense to drill. That's right. And deep sea drilling, which costs more, makes sense even more now because we need excess capacity. So what do we like? The best in the business? Who's the best in the business? RIG, R-I-G. They're a company out of Switzerland, and they have the newest and best sea drilling machines. In fact, two of the best machines that are on the market today that cost about $1.2 billion a piece for RIG to make, that have been sitting dormant since 2014, are online again now. Chevron just signed an $870 million contract with RIG to lease their rig for 5 years. BP, British Petroleum, ExxonMobil have also made deals with RIG, and there's also more companies that are coming to RIG for deep sea drilling, including Petrobras, which is one of the largest oil companies on the planet, the Brazilian state-owned company. PBR is the ticker on that. Anyway, the Atlantic Ocean from Brazil to Guyana is absolutely flush with rigs all over the place. The Saudis and the United Arab Emirates, 80% of their increased capacity has come from offshore drilling. They're all buying rigs. In fact, there's not enough rigs to lease out there. 90% of them are leased out or under contract to do so, compared to 60% 5 years ago. Okay, yes, absolutely, you're asking, why would we recommend RIG now? It's had quite a run. The stock has run from $2.40 on September 26th all the way to $6.30 or so on January 24th. Are we chasing the stock? No, we never chase stocks. But I'm telling you something that I like, a position that I like, and I like it to come to us. Where? On a pullback to $5.50, $5 and $4.50. So if I can average in a price of $5, I love the stock. It's a beautiful buy. To be honest, it's actually a pretty good buy here at these levels. Maybe I'd even nibble at it, but let it come to you. There's no rush. It's not going to explode. But where is it going to? Remember, this stock was a $144 stock in 2008. Is it going back to $144? No. But can this be a $15, $20 stock in the next 12 to 18 months? Absolutely. So we love it here. Averaging at $5. Ride it to at least 15, unload some position. Maybe, it's up to you. We'll check back in a couple months and see how RIG is doing. Now, if you're running a balanced portfolio and you want to see recommendations both on the long and the short side, please check out our video on WIN, which we believe has run too far too fast, and it's a short. So that's our buy for today. That's all I got. We'll be back with you shortly. Rothman, over and out.